Hey, this is Ospreyeye from mychartcoach.com, and we're going to look at some of the shipping sector stocks that we've been covering. There's been this very nice rally. Congrats to everyone that's been following our charts in TA. Been, a huge money maker for everyone. Today, there is some red flags on the charts, so I want to explain to you about black solid green candles. If you look here at the EGLE chart, you'll see that today's candle is forming a solid green candle. The current share price is trading below the open. The open is the top of this real candle body, and the current share price is below that level. That's forming this solid green or black candle. And what this is showing, that even though the bulls were able to run the share price up to high of day, you can see this long upper wick formed. The bears took control, and now the bears have actually driven the price below the open. So even though the share price is up on the day, it is trading below the open. And so what that has done is it's trapped anyone who's bought above today's open is now underwater. And so this is why we call it a bull trap, because the bears, sucked everybody in with the gap up open, and then they drove the share price down. And so what this is telling us is caution. Okay, this is signaling caution. EGLE is in a nice uptrend. Candles are forming above the middle Bollinger Band, riding EMA's 4 and 8 support higher. As long as the middle Bollinger Band support level holds, the uptrend should continue. The 50-day simple moving average is the key level to close above and turn into support. The candle is forming above that level today. So there still is a lot of bullish developments on the chart. It's just what the candle is telling you today is caution. There might be a chance to sell and reload lower. That's what we're always looking for opportunities to make trades. And so this is just telling you that the chart is starting to break down. If you look over here at the EGLE 15-minute chart, you'll see here that at the same time this black candle is forming, if you look at the 15-minute chart, you'll see the middle Bollinger Band support level broke at 11 o'clock. So, and then at the same time, MACD failed to have this bullish crossover here. You can see the MACD line failed to cross over. So what you have is you have a black solid green candle forming on the daily chart, and at the same time, the 15-minute chart is breaking down. And so what this is telling you is that the chart is starting to lose steam. The bullish momentum is starting to fade, and that the bears are starting to take control, and that's telling you to take action. And so this is just these are all red flags. So if you see a black or solid green candle forming after a gap up open, that is always our signal to avoid the stock and look for a reload lower. And then if that pattern forms and the 15-minute chart breaks down with candles forming below the middle Bollinger Band, that is your signal that the chart is broken. Okay, if you look at these other charts, look at DRYS. DRYS, same thing. DRYS, solid green black candle forming, okay, below the open. This is signaling downside risk. As you can see, today's candle is forming above the upper Bollinger Band. Okay, this was a frothy move. The candles pull back into the Bollinger Bands. So not only do you have a gap up open above the upper Bollinger Band following 3 green candles in a row, but then you have a black candle forming, and this is the red flag. Okay, same thing with PRGN. The 100-day simple moving average was our target. It needs to break that level to head higher. As you can see, a solid solid green black candle is forming today below the 100-day simple moving average. This is the red flag that the chart is breaking down. Okay, if you look here at DSX, the reason why we call it a black candle, if you don't use the red and green candles, if you use the white candles, today's candle will come up black. Notice the share price is up on the day, but the candle is black because the open the current share price is trading below the open. So these are all red flags. Our theory is to avoid stocks that form a black or solid green candle after a gap up open, and to look for a reload lower. Okay, thank you very much for viewing this chart. If you want to learn more about this and learn how to trade using charts of technical analysis, please check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.